I'm Patrick Camuso, founder and managing director of Camuso CPA. For nearly a decade, my firm has been doing digital asset accounting and crypto taxes long before the 1099 DA existed, even long before most taxpayers were aware of their tax requirements related to cryptocurrency and other digital assets. In this video today, I want to go over the 1099 DA. This is going to be a definitive guide to the 1099 DA for the 2026 tax filing year. This is going to be the first year taxpayers receive this form. And there's going to be a lot of questions, and I want to try to cover them all in this video. What does this form report? What does it not report? Why is your cost basis details missing? What to do in order to comply at the federal and state level? We're going to go into all of those details. So let's get right into it. Most taxpayers that are getting the 1099 DA may first think, oh, I'm getting a tax form. Maybe they also have traditional investments like a 1099-B. When you get that in the mail, it's usually complete in most cases. And, there's not much work to be done as a taxpayer. So there may be taxpayers that first see this form or hear that you're receiving this form and think, oh, great, my exchange calculated everything for me. That is not the case. And that is not an assumption that you want to be making, particularly for this filing season. If you rely on the 1099 DA alone, you may be overpaying in taxes and underreporting your transactions. Both of those are actually possible at the same time, and we'll get into why. So there's many nuances to this tax form and many things that you need to watch out for as a taxpayer. Firstly, the most 1099 DAs are not going to be reporting cost basis information this year. So that means that only proceeds are going to be reported. So brokers are going to be only reporting the sales or proceeds for transactions that are happening on their platform. And in most cases, your cost basis information is going to be blank. Now we'll get into, how this changes over the years and how this develops here in a moment. But when you're receiving the form this year, you're not going to have cost basis data. And this will at least be for this year, that it could persist into more years. So that's going to be one of the issues that, that's going to require taxpayers to reconcile this tax form with their own accounting before actually reporting their taxes. There's also going to be large categories of transaction activity that are excluded from broker reporting, at least at this time. Wrapping and unwrapping, liquidity provider activity, staking, lending, short sales, notional principal contracts. We'll get into these, but these things are not going to be included on the 1099 DA. So right off the bat with those two, you can see what I'm alluding to. If your cost basis information is left off, but also some of your taxable transactions are left off the 1099 DA, if you just blindly file that, you could overreport your taxes related to the transactions that are on the 1099 DA and still not be reporting all of your taxable transactions potentially. The 1099 DAs are only going to cover activity that's taking place with brokers. So in most cases, non-custodial wallets and DEXs are not going to be sending these statements. That's going to be another gap in the data. For this year, there's no transfer statements or sharing of information between brokers as well. And because this is the first year the 1099 DAs are going out, there is transitional relief for brokers if they file the 1099 DAs late. So some brokers might actually send these to taxpayers late, and taxpayers are still going to have all the tax reporting requirements that we're discussing here. The 1099 DA is also going to be reported in UTC time zone. So there can be differences with what's reported on the 1099 DA based on that time zone versus your local time zone, especially if you're making trades at the end of the year. Overall for just pricing discovery and considerations around that, it's an important thing as well. So that's another issue that you need to reconcile the tax forms that are going to be coming in a separate time zone from you with your own records that are in your time zone. Additionally, the 1099 DA is reported on an account-by-account basis, and Revenue Procedure 2020-2024 clarifies that taxpayers should be maintaining their accounting and tax records on an account and wallet-by-wallet basis. So, this is a whole nother accounting process and shift that taxpayers should have made already that I believe many taxpayers have not made. And when these 1099 DAs come and they need to reconcile their activity with the 1099 DAs, the first step is going to be getting their accounting act. And these issues about, account by account and wallet level accounting are, going to be brought to their attention. Similarly, in the revenue procedure, it was clarified, the accounting methodology and how these apply to digital assets. Not only are they on account by account, wallet by wallet, but the default is FIFA. And, spec ID is permitted, but you have to follow strict requirements, including pre-sale lot identification, which usually takes the form of standing orders, which, I've done separate videos on many of these topics. And we're going to get into more of the details here on this video on everything I've discussed. But this is, at a high level, many of the issues that taxpayers are going to encounter with the 1099 DA. So, the 1099 DA is an IRS information return that custodial brokers are going to use to report certain digital asset sales and exchanges to the IRS. And, this starts with transactions on January 1st, 2025. So you're going to be getting them next year, or this year for last year. So you're going to be getting them in 2026 for this 2025 activity. This year, it's only going to be reporting the proceeds, like I said. The 1099 DA, as I've alluded to, is not going to be an accurate tax calculation that you can just take as a taxpayer and go and file. So, one of the interesting things is who is going to be sending you to 1099 DAs and who fits in this definition of a broker. The reason why it's interesting is because it's shrouded in a bit of controversy and even politics to a certain degree, because, there was a lot of industry pushback during the comment period for the proposed definition of brokers and the proposed broker regulations, and the finalized version included DEXs in that definition. And then through a Congressional Review Act, the portion of the rules that extended the broker reporting obligations to these non-custodial DeFi actors was overturned. So right now, this only applies to more, centralized actors, not DeFi actors. So most taxpayers are going to expect to get this from exchanges and other centralized platforms where they may be transacting in digital assets. So the activity that's not included on the 1099 DA, all the activity where you're transacting in a decentralized manner using non-custodial wallets, you're going to report that on your own and make sure that you're using the correct accounting methodologies and reporting that along with any information that is happening on these platforms with brokers with the 1099D. So in 2025, brokers are generally going to only report gross proceeds. Basis reporting is optional in 2025. So, I'm not expecting most brokers to report that. And then starting in 2026, so January 2026, covered digital assets they'll be reporting the basis for, but even that is going to be limited. So covered assets, this is going to be an important definition going forward, are assets that are acquired on and held on continuously on the broker's account. So for those in 26, they'll have to report proceeds and adjusted basis. Again, for 2025, they're not going to have to report that. For, what's defined as a non-covered asset, tokens that are transferred in, or, assets acquired before 2026, basis reporting can remain optional. Although, optional can mean it can be provided or not, but in many cases, it's not going to be provided. So in 2025, you can't really expect an accurate tax calculation on the 1099 DAs, since many of them are going to report proceeds only. And then going forward into 2026 tax year, when you'll be receiving those forms in 2027, Even then, you are transacting across many different platforms and non-custodial wallets and interacting with dexes, and you have fairly complex activity. You're largely not going to be able to rely on the 1099 DAs for full accuracy. Now, just because you can't rely on them does not mean that they can be ignored. This is very important when it comes to tax reporting. If you don't report the DA activity, you can receive tax notices due to matching errors with the IRS. So, the 1099 DA is a visibility mechanism to a large degree for the IRS to start to, have more compliance and get that 75% non-compliance rate for crypto investors down. So you are going to have to report this activity, but you're going to have to first have your own accounting that is reconciled and accurate, and then report the 1099 DA activity, but reconciled with your activity with any necessary adjustments. So ultimately, you're reporting everything that's on the 1099 DA to avoid matching errors, but you're also reporting an accurate gain or loss. So you remain fully compliant with the IRS, and you're not understating your taxes or overstating your taxes. So additionally, there's certain transactions that is not going to be covered or included in the 1099 DAs. These may in the future, but now many of these are not. So this would include wrapping and unwrapping transactions, liquidity provider transactions, staking, lending, short sales, notional principal contracts. So, these are temporarily outside of broker reporting requirements. And you as the taxpayer, again, are still required to whatever degree is necessary to remain compliant or still report these transactions to the degree that they are taxable. So the imperative is on the taxpayer to now properly do their accounting, reconcile it appropriately, and then also for tax purposes, reconcile that with the 1099 DA and make sure it's all aligned from a tax reporting standpoint. And the 1099 DA, it's going to omit basis in 2025. Many assets are non-covered. Most of our clients at Camuso CPA and most serious market participants are going to have a deep need to maintain their own accurate set of books and records that again they can reconcile against this 1099 DA activity. And you want to make sure that you're not over or under reporting and you're not triggering these matching issues that can come by not properly reconciling with 1099 DA. So you need to make sure you're reconciling all the 1099 or all the cost basis issues. You need to make sure that any of these taxable transactions that aren't reported on the 1099 DA are included. And you need to make sure that when you report this, you're reconciling all this activity that's not on the 1099 DA with what is actually on there. So it all aligns with the IRS's matching mechanisms. So obviously a big component of this is the taxpayers' records and the quality of their accounting. And a big impact on this is Revenue Procedure 2024-28, which, many taxpayers from what I see are not compliant. It's something we're still, when we bring in new clients to Camuso CPA, oftentimes we're still working on getting them into compliance with this, even though you're now past a safe harbor. And what this did was clarify that universal accounting is not acceptable for digital assets in most cases. So it requires account by account and wallet by wallet accounting versus universal accounting. So you have to apply an accounting method not just to an asset, but to an asset based on which account and which wallet it's held in. So, this has a lot of implications from when you're calculating your basis to when you're planning for dispositions. So, a compliance and a tax planning perspective. But the first step is that you need to, if you have legacy assets that you've held for years that you've accumulated, you need to transition if you've been keeping them on a universal accounting method to an account by account, wallet by wallet methodology through an allocation process. So this is something that many taxpayers are going to have to get aligned with because many of them are still under the assumption that universal pooling is acceptable. When these 1099 DAs come and the it becomes evident for taxpayers that they need to start reconciling this data. And they're going to have to get into the weeds with their accounting, and they're going to have to get into compliance with this revenue procedure. This revenue procedure also clarified that FIFO is the default and that pre-sale lot identification is required for spec ID to be valid. And it outlined a standing orders as what I view as the most viable mechanism for taxpayers that want to align with that. But even in these cases, the wallet and account segmentation still applies, and you need to get compliant with the standing orders and establishing all of that. So, these are some of the accounting considerations that clients are going to have to, or that taxpayers are going to have to get aligned with to even get their accounting accurate, to even get a chance to reconcile it with this 1099 DA activity. And even with this revenue procedure, the industry is split on how the wallet segmentation should look from an accounting perspective, and even what the definition of a wallet is and how this applies practically for accounting purposes. So, some people are pooling wallets, some people are treating each wallet as an individual wallet. And depending on which type of wallet and asset we're talking about, these definitions and considerations can get very technical. So I've done completely separate videos on this. I'm not going to get too into the weeds on this, but this is another issue in terms of, making sure that your cost basis calculations are accurate so that your overall accounting is accurate. You need to transition from universal to account based. You need to make sure that you're applying a methodology that is acceptable for you as a taxpayer regarding how you apply that with your definition of a wallet. And you need to make sure that you're applying the correct accounting methodology when it comes to FIFO, or if you are using spec ID, to make sure you have standing orders or some mechanism for pre-sale lot identification. And this is what it's really going to take now to even have an accurate cost basis calculation. And you as a taxpayer need this before you can even reconcile against a 1099 DA. So, that is the biggest thing, is that this 1099 DA is not going to calculate the gains for you. It is going to create a visibility and matching mechanism for the IRS, where they're going to be able to get data on, your transactions that are taking place on these platforms regarding the proceeds. And if this is not reported, it can start to cause compliance issues for you. So another issue is the late 1099 DAs that are, possible and even probable for taxpayers this year. This is the first year these 1099 DAs are going out, and there is transitional relief for brokers if they provide the 1099 DAs late to taxpayers. And, this can lead to taxpayers possibly filing their returns and then receiving the 1099 DAs and realizing that in order to stay into compliance and avoid some of these issues that we've discussed, they may need to, amend their returns for some of these tax reporting issues. So, this is something else that is going to have to be considered for taxpayers. Likely it makes sense to be on an extension this year, but ultimately, you're going to have to be on the lookout for that. And you should really be taking into account, not only doing your crypto accounting, but considering, where was your transaction activity for the year? Where can you be expecting to get these 1099 DAs? What platforms can you expect to get it from? And, take this into account when you're preparing your return and considering filing it and ensuring that you do have complete and accurate tax information. So another consideration is state level compliance. So the 1099 DA is a federal form, but it's going to impact state level compliance. They're going to utilize the 1099 DA directly or indirectly for their own compliance purposes to identify underreporting or non-reporting. These reconciliations in tax reporting are imperative for compliance, not only at the federal level, but at the state level as well. So we've seen Montana and other states, start to give some guidance on this. We're gonna likely see much more of that. That's something we're watching very closely at Camuso CPA. But this is, something that is going to extend into state tax reporting as well. So it's important to make sure that you are considering all of this not only at the federal level, but also at the state level as well. So, what do you need to do as a taxpayer to prepare for this? You need to get your accounting updated, number one. And that means getting into full cost basis reconstruction, full compliance with Revenue Procedure 2024-28, an accurate basis calculation and capital gain and loss calculations through 2025. Then 1099-DA comes out. You're going to have to first reconcile the 1099-DA to your accounting records. And then you're going to have to properly report both on your tax return in an integrated fashion where, you report the 1099-DA and you make any adjustments as necessary to get an overall accurate gain or loss calculation based on what your actual cost basis is. So, the 1099-DA is really the start of what I'm calling the digital asset compliance era. This is going to increase the IRS's visibility into taxpayers' transactions, and it's really the beginning of this informational reporting that we're going to see even expand further with CARF and other informational reporting regimes that we'll be covering here on separate videos. So if you want to dive deeper into this, or if you need assistance getting your company or your investment portfolio caught up, getting your cost basis reconstructed, getting in compliance with the revenue procedure, and getting ready to accurately report the 1099-DA and reconcile it with your accounting records, that is what we can assist with at Camuso CPA. So you can visit our website, CamusoCPA.com, the contact us page, and you can set a time to discuss your company or portfolio in detail so we can assist with getting you into compliance with this. Until next time, I'm Patrick Camuso, signing off.